Hey everybody, how are you? Shawn C,
Jamie P.
and we are going to do a little interview with a good friend of ours and trusted lender, Joe Parisi. So Joe, would you like to introduce yourself, kind of tell everybody a little bit about you and maybe a little bit of the history, since this pandemic broke, what's been going on in the mortgage industry?
Certainly. Thanks for having me, guys.
Pleasure.
So I'm Joe Parisi with Guaranteed Rate. We're a mortgage bank and a broker, which basically means we're a direct lender as a banker, just like any bank, B of A, Wells, Chase. And then as a broker, we can broker deals out to lenders that are portfolio lenders that don't fit the box. So personally, I've been in the business now for 33 years. Worked at anywhere from a bank, which was Citicorp at the beginning, to a mortgage broker, direct mortgage broker, no banker, to a mortgage banker broker, and then just made a switch, well, not just, but 3 years ago to this company, Guaranteed Rate, which we're a national lender in all 50 states.
Which is helpful.
So yes. So to give you an idea, kind of a brief history of what's happened since the pandemic hit. What started out as fear, which was when the pandemic broke out in China, and it wasn't even close to being here yet. The fear throughout the world was, since China is such a huge supplier of services and goods to the world, that supply chains were going to be shut down completely. So the economists started thinking, whoa, wait a minute, because with the supply chains being shut down, the economy's going to slow down, if not screech to a halt. So what happened, that's when you saw the stock market nosedive. So stock market nosedived days in a row. You saw that panic. And it was truly just a panic and a knee reaction. And then what happened is investors sold stocks. And what they did with them is they put them into bonds. So they bought bonds, which are treasury bonds, but also mortgage-backed security bonds. So what that did is all the money going into bonds brought interest rates down. So interest rates plummeted. That's when we saw the rates go down into the low threes and caused a refinance wave. So that caused a capacity issue for lenders because they were backed up. That wasn't the real pain, though. The pain that came was when it got here to the U.S. and we had the lockdown and stay-at-home order. So then the mortgage companies were saying, wait a minute, this could be bad. We could have a recession. We could have people losing jobs, going on furlough, layoffs, which, as we know, was the true result.
Right.
So why would we want to give a mortgage today to someone if we're afraid they're not going to have a job next month? So the market dried up. There was a true liquidity crisis where nobody wanted to lend. And then on the backside, which is the secondary market, when we fund a loan, we pass it off to Fannie Mae, Freddie Mac, anybody else that would be willing to buy it. There were no buyers. So then we saw the rates go from the low threes to in the mid fives. There was a couple of days we were in the mid fives. So it was just and bouncing from hour to hour. It was chaos. So that caused a change primarily in the markets that are above what's called a conforming loan. So a conforming loan is what Fannie Mae and Freddie Mac will buy. And that in LA County is up to $765,600. Above that, it's called a jumbo loan. Or if Fannie and Freddie won't buy it, even if it's a conforming loan, say like the person doesn't qualify for tax returns and we have to go to one of those portfolio lenders. The markets that really got hit were jumbos and the alternative qualifying programs. So they dried up completely. There was escrows that actually were ready to close, and the lender said, "We're shutting the door."
We experienced that firsthand, and I know I have friends and brokers out there that had 8 and 10 deals in there and lost 8 of them. Because those were very popular loans.
Yep. So fortunately, we had the federal government come to the rescue. As you know, not with just the benefits for the consumer and the payroll benefits, but also in the mortgage industry. The Fed's committed to buying mortgage-backed securities because there were no buyers. So they came in to prop the market and give it liquidity, which again kept that conforming market alive. And then recently now we're seeing, in fact, just in the past week or so, we're seeing opening up in the jumbo market as well as in the non-qualified mortgage market. Now, the non-qualified mortgage, those are the mortgages where you can't qualify with a tax return, so there's little tricks and they go about to get that approved. Those are still very slim, and I wouldn't touch them with a 10-foot pole right now because of the uncertainty of the loan closing. But we've got numerous sources for jumbo loans now too that are back in the market. So what's happened is that original panic has subsided now, and looking out into the future, I see things improving even day by day with investors coming back. So the liquidity is back. There was a couple of weeks there where it was a crisis, and trying to find where to place a loan was a real struggle.
Yeah, I know that you and I have been in the business a long, long time. We've gone through several cycles, several events, 9/11, earthquakes, all those things that you and I have gone through together. And this felt much like the mortgage meltdown not that long ago, 2008, things like that, because lenders then really like overcompensated the qualification process. Got more and more difficult, timely. It was not timely. And, you know, I could understand because no one knew 30 days from now whether or not they were going to have a job. But that panic, I feel it. I know Shawn feels it. You know, we're selling things, we're showing things. You look at statistically, views and people looking at property has had a huge swing upward in the last week or so. So we're feeling like that panic is dissipating. We see some light at the end of the tunnel. Absolutely. So in general, this is a good time. I mean, if you're really in that Fannie Mae market, yeah.
Oh yeah, and we still have second mortgages where if say you want to get $1 million in financing, we don't have to do a jumbo loan. We can do a 765 first, and then a second mortgage to get you to $1 million, and still get the easy processing and the good rates. Speaking of, like you said, a good time. Interest rates. This is a sign of the liquidity coming back to the mortgage market. Conforming loans now, we can get a purchase conforming your loan at 3.125%. And then the high balance, which is up to that 765, is 3.375. Jumbos, even though they're a little more challenging, 3 7/8. So the market's definitely back there. Yeah, it definitely back some of the consequences that have resulted from that now has some. Like Jamie mentioned, people losing their job. When any lender funds a loan now, they are doing double and triple work verifying employment at the close. So normally at a funding, we would verify employment like 10 days before closing. Now it's pushed you within 3 days, and we have to verify with the employer, not just they're working there, which is what we would normally do, but has your income been reduced as a result of COVID? Are you on furlough? Anything that would change the qualifying for the loan. So there's a little more intense process at the closing on verifying employment. But other than that, I spoke at an virtual office meeting, realty meeting yesterday, and I was saying, I'm surprised at the activity. I mean, the purchase market is moving along surprisingly well.
Yeah. We just had a conversation with a buyers of ours, and you know, our point of view was, you know, if you're in that under 800,000 market, there is no COVID-19 because we're in multiple offers. I mean, we're you know, we're seeing overbidding, and you know, those buyers aren't even paying much attention to it. You know, there is such a pent-up demand in that range. So, you know, that shows, I think we're going to see some healthy comebacks, you know, coming in our near future, you know?
Yeah, and that's what we're seeing as well. One other thing I wanted to touch on was that happened during the panic was with the safe distancing and practice of no contact.
Right.
How are we going to close deals? How are people going to sign docs? How's a notary going to notarize? How's an appraiser going to appraise a property? And it shows you kind of how creative we are here, because things got really creative. Appraisers, we had them stand outside the property with the owner or seller inside the house, and they would FaceTime throughout the house, and that's how they would get the interior photos. Notaries, they would drop the packet at the front door doormat. The signers, the buyers would grab the packet, take it inside, and through the window, they have to visually see them sign it. They would see them sign the documents. So it got to be, yeah, kind of funny how creative people can get. But it's moving along smooth now, really smooth.
So do you think the qualification time has changed?
I don't. We can still process 30-day escrow with no problem at all.
Good to hear.
Appraisers are actually fantastic with the turn time right now. We can be getting them in like 2 to 3 days. So they're moving very fast. The only possible challenge in maybe a 30-day would be a large jumbo loan, $2-3 million jumbo loan. But even that, 45 days is still doable.
Do you see that jumbo, that luxury, I call that luxury market, which is probably 4 million plus? Has that slowed? Is that the slowest portion of the market right now?
I would say so, because I really haven't been getting many inquiries or pre-approval applications at that price point. Conforming, like you mentioned, but also getting activity in up to 2 million price point for pre-approvals. But above that, yeah, not much.
Got it. All right, cool.
So you just talked about pre-approvals, and Jamie and I always stress to prospective buyers how important it is to be pre-approved. But right now, it's more important than ever, right, Jamie?
Yeah. The city of Los Angeles and the CAR and NAR have come out with guidelines, and they're actually saying that you can't visually see a home without being pre-approved. So getting approved early in the process, I think, is your first step in the buying process now. And so getting with somebody like Joe and having him get you, really approved, having those verifications of funds and documents available is going to make you a better buyer, and you're going to be able to actually get in and see those properties that are that you're going to want to buy. Yeah.
Some of the people that may be watching this know that I just recently bought a house, and actually Joe and his team helped me through the process. And I just kind of want to give him and his team a shout out, because it was incredibly smooth and very easy. And it was at the very end of my deal, was kind of at the start of this whole pandemic. But I got to say, it was virtual all the way. And that's kind of what I wanted to touch on. Joe, if you want to just quickly talk about your approval process and how it's very streamlined at this point.
Sure. And we're still friends after all that. Yeah.
It was a great experience.
The mortgage process today can be, I call it documentation to the ridiculous. So, you've got to be prepared when you're looking to get pre-approved that we're going to ask you for every document you think you have in your file cabinet, and then some more in your kitchen cabinet. So you just got to be prepared. But the process is as easy as it's ever been, because it's all digital. We have a digital application. You click on a link and you start inputting your information, and there's a secure box to upload all the needed documents. So we've done pre-approvals in a day. By the morning I'll get the inquiry. We'll have it by the end of the day. As long as the client has their documents ready to upload, it's pretty simple and quick. So that part of it makes it a lot easier. Just got to be prepared for the documents that'll be requested. Sometimes they're onerous, but it's just what it is today, because everybody wants to do the checks and balances.
Right. And sorry, Shawn.
I got to say how easy it was. It's if you can attach something to an email, then you can go through this process with Joe. That's how easy it is.
Well, you're a new homeowner, and congratulations. I think that's amazing. You did it through all this pandemic stuff, and that shows your belief in the systems and the foundation of real estate. So that can't say more. I was wondering, with the delay in filing taxes now in July, Has that made a difference, or is that affecting now needing 2019 tax returns?
No, it's not. In fact, normally with the April 15th deadline, if you had an extension filed, we still wouldn't need the 2019. So it really hasn't had any effect at all on the self-employed borrower, which is where we need tax returns. So yeah, it's been running pretty smooth without any major effect.
Great news.
Yeah.
Great, that's awesome.
Very cool. Any last remarks from you, Joe? Anything else that we want to share with our viewers?
One thing I wanted to touch on, the last thing that I had is on forbearance. So if you currently have a mortgage and you are going to or have requested forbearance on the payments, the lenders and the government have been working with borrowers on making it easy to do that and not have a lump sum now that's due after that forbearance is over. So that it won't be any kind of a negative in the future when you go to look for a home or to look to refinance, because the government, as those same lenders, you cannot report that as a late payment or a modification. So the circumstances right now are that it won't be any kind of an effect in the future. What we don't know, because it's the unknown, is the client, the borrower that goes beyond like even 3 months to 6 months to 12 months. So they haven't really set guidelines on that. So it's kind of like, buyer beware if you're going to go into forbearance. And of course, if you need it, you have to. But right now, we don't know in the long run how that's going to affect you being able to acquire a new loan.
Got it. Good info. That's fantastic. If you know Joe, you know that Joe's a surfer. Joe and I used to surf for years together. And so have you been in the water?
I have been in the water, yes. Jamie was my mentor. He taught me how to surf.
Don't blame that on me.
Yeah, right.
That's awesome. We really appreciate you taking the time. I know you're busy, and these are questions that are constantly coming to Shawn and I from our clients, our past clients, our friends, and things like that. The mortgage process is a mystery to a lot of people, and thank you for adding some clarity and making it seem as friendly as you can possibly make it. It's no fun, it's necessary, but the results are you become a homeowner, and there's no better feeling than that, right, Shawn?
Absolutely.
Yes, indeed.
So
thanks for having me on, guys.
Absolutely. Shawn, Joe, you want to give out how we can our people can find you?
Yeah, probably the easiest, maybe instead of a phone number, as my email address is pretty easy. It's joe.parisi, so joe.parisi @rate, like interest rate, rate.com.
Great.
Perfect.
I will put all that information in the notes. So, and if you guys didn't get that, just reach out to me or Jamie, and we will connect you with Joe. So,
absolutely.
Thank you, Joe. Really appreciate it.
Thanks, Joe. Right, it's great to see you. You're looking handsome as ever.
Likewise. Thank you, JP Nation.
It's a pleasure.
Yeah.
Welcome to the nation, dude.
Thanks.
All right.
Yeah.
Bye.
Everybody.